Get unlimited access to all of our CPE courses at www.teachucomp.com/unlimited CPE.
In this lesson, we'll look at review questions 22, 23, and 24. Let's begin with question number 22. All of the following are Section 197 intangibles except A. Interest in a corporation or partnership. B. A no-compete arrangement between a new business owner and the former owner. C. A copyright. Or D. Lists and data regarding possible customers in a database. The correct answer is D. This is an asset that's listed under the title Assets That Are Not Section 197 Intangibles. Now let's take a look at review question number 23. True or false? When accounting for the depletion rate for timber, cost depletion must be used. The correct answer is true. The cost method for depletion is the only acceptable method when working with timber. Now let's take a look at review question number 24. The Digger Corporation is a mining company. Their gross income for Property 1 for 2012 was $100,000. How much depletion can they deduct if only gold was mined at Property 1's location? A. $22,000. B. $14,000. C. $10,000. Or D. $15,000. The correct answer is D. The percentage for gold under the title Mines and Geothermal Deposits is 15%.
Like what you see? Get unlimited access to all of our CPE courses at www.teachucomp.com/unlimited CPE.